Well, good morning, everyone. I'm Kent Lassman, president at the Competitive Enterprise Institute, and I'll be your host today for a panel discussion featuring CEI Vice President Iain Murray, and hopefully we'll be joined in moments by Senior Fellow Ryan Young. This is the first in a series of events that we'll be hosting through the spring and summer on a theme, Repeal for Resilience, and today we'll look into the key drivers of a movement to identify and dispatch regulations that, in light of contemporary crises, are increasingly viewed as never needed. As a reminder for everyone, we'll be recording today's online panel, lightly editing it, and posting it on YouTube and Facebook. So if you like what you heard and you want to continue the conversation, we'll provide the links and hashtags for you to share with friends. In addition, after short presentations by our panelists, I'll moderate questions from each of you during the second half of the hour. And I want to get right into the issues. So let's turn to Iain Murray, who's developed a very useful framework for how to think about the policy questions, including how some never-needed regulations inhibit responses to the pandemic, while others are limiting America's ability to build resilience for future crises. Iain, the Zoom is yours.
Thank you, Kent, for what I assume was a very nice introduction. I'm Iain Murray, as Kent said, Vice President here at CEI, and I thought I'd just briefly outline why we think there is a good opportunity for a deregulatory package to help out the struggling economy right now. It's not generally appreciated, although yesterday's events did
everyone hear me?
Did bring one of these into starker relief. That three shocks came at the same time. We all know about the coronavirus shock to the economy. At the same time, there was an oil price war going on that had severe ramifications for the domestic energy industry. This was compounded by the coronavirus-induced slump in demand, and that led to the crazy and unprecedented situation yesterday, where oil contracts were actually trading in the negative, with people being paid $30 or $40 a barrel simply to take the oil off people's hands. And there was also a financial crash. This financial crash was may have actually been sometime in the making, and might actually have been a market correction were it not for the compounding effects of the coronavirus. And all of this was in the context of an ongoing political realignment around the world. We've seen the rise of nationalism, populism, and sadly a resurgence of socialism. When you put all these factors together, this has put the free market under more pressure in the Western world in general, and certainly in America. This has put the free market under more pressure than at any time since at least the end of the Cold War. Now, the trouble is that our politicians, when the markets are under pressure, tend to resort to what at CEI we call flash policy. The idea that something must be done, this is something, so we'll do this. And there will be wave after wave of flash policy in response to a series of crises like this. The length of the crises, as we've already seen, they've been going on for well over a month, and quite probably will continue to go on for many months more. This will probably mean wave after wave of flash policy. We've seen 3 coronavirus bills pass through Congress. A fourth is currently under debate right now. And we're probably going to see a lot more of these. And these will tend to focus around spending and bailouts. However, there is a silver lining in all of this. I believe that there will be a call for deregulation for at least three main reasons. The first is that traditional economic stimulus just won't work in an era of social distancing. When the whole point of economic stimulus is trying to get people to engage in face-to-face economic transactions, that's probably not going to happen in an era of social distancing. We need something else instead. Second, there is a realization that the Food and Drug Administration and the CDC and other bureaucracies really helped screw up America's response to the crisis. Bureaucracy, regulations, rules that may have been there for the very best of intentions helped delay America's response, and as a result has probably led to the virus crisis being much more severe than it should have been. A third thing is that across the country, governors, mayors, local jurisdictions all realized that they had a bunch of regulations in place that were just making things worse than they could be. We saw a wave after wave of very quick deregulation at the state and local level. So when you put these three factors together, I think there is the possibility of a package of genuinely deregulatory relief policies gaining traction in one of the next phases of relief. That's why at CEI we put together a campaign based around the idea that a lot of these regulations were never needed in the first place. So we deployed the NeverNeeded hashtag, one word, never needed, on social media, and worked with allied groups, not just in the United States, but internationally as well, to get across the idea and crowdsource the idea that regulations, a lot of regulations were never needed. We asked people to flag when a local jurisdiction was repealing or suspending a regulation, to flag that with the hashtag NeverNeeded. And as a result, we were able to compile an inventory of these regulations on top of our own ideas. And that enabled us to come up with essentially four main categories of deregulatory activity that can form part of a relief package. The first is to remove regulatory barriers that prevent an effective response to the crisis. These are in large degree medical in focus. They focus around the FDA and the CDC. For instance, not requiring pre-market approval for lab-developed diagnostic tests. Diagnostic tests are desperately needed around the United States. We know we are testing far fewer people than other countries are. As a result, we really still don't have a clear idea of things like the incident fatality rate. How likely are you to die if you get the coronavirus? In order to get a clear idea of this, we need much more testing. We're going to need much more testing if it is confirmed that the virus is as deadly as we think it is, in which case we're going to need to continually test. So having the FDA stand as a roadblock for lab developed, private developed diagnostic tests, saying they can only be used once they are approved, is going to delay an effective response to the crisis. So that's an example of one deregulatory effort we can take. A second is removing regulatory barriers that reduce resilience to changed economic behavior. For instance, I've talked about the CDC and the FDA already. In all probability, the CDC and the FDA were spending far too much time on non-infectious disease related research. At CEI, we were engaged in a long battle with the FDA over flavored vaping products, for instance, which the FDA claimed was a tremendous threat to public health, when a genuine threat to public health was lurking just around the corner, and they weren't paying terribly much attention to it. This debate was going on while the coronavirus was ravaging the Wuhan province in China. So in order to increase our resilience to future events and to change the economic behavior, it'd be a good idea to refocus the CDC and the FDA on genuine public health threats. So that would be one suggestion. Another suggestion would be removing employment classification barriers. We've seen that the economy has changed considerably, and now businesses like restaurants need to focus much more, at least temporarily, on delivery than on any in-service, in-restaurant service at all. If you're focused on delivery, then you will want temporarily to have many drivers at your service. However, employment classification barriers might mean that these drivers have to be classified as your employees. No business in their right mind is going to take on several hundred employees if they know that they're not going to necessarily need them in 2 or 3 months. Employment classification barriers are a big problem here. California introduced a new classification of employees laws called AB5 last year, which at the worst possible time eliminated hundreds, probably thousands of at-home jobs, leading these people to be unemployed at the worst possible time. Removing those employment classification barriers is another good example of increasing the resilience of the economy in these changed times. A third category would be suspending or repealing policies that make the crisis worse than it would otherwise be. The Jones Act is a great example of this. The Jones Act was introduced after the First World War in order to provide for a merchant marine, American merchant marine service. It has essentially destroyed the American merchant marine shipping industry. That led to the much more shipping that led to much more shipping by land rather than by sea. If we had sea-based shipping now, things would be much better than they are currently. Trade barriers are also a good example here. We need to get rid of these policies that are making the crisis worse than it would otherwise be. Finally, we need to put in place reforms that allow the economy to reboot quickly. General regulatory reform would be an excellent example here. Energy policies like repealing state mandates would also be helpful to the industry that is suffering really very badly at the moment. Some of you may have seen Mark Andreessen's call for America to build things again over the weekend. Mark Andreessen, the venture capitalist, but when he said that America needs to build things again, he doesn't necessarily mean transportation infrastructure. He means just generally pulling together all our innovative and entrepreneurial expertise and create the things that people want to see. Regulation and precaution are the main reasons why we are not building. And that's important because as we rebuild the economy, it will probably look very different from the pre-coronavirus economy. If we allow regulation to stop us from rebuilding, we're going to be faced with another Great Depression. Regulatory relief must form part of the rebuilding effort. That's the only way we can ensure that our rebuild will be resilient. And with that, I'd like to hand over to my colleague Ryan Young, who will be able to give us some more examples of how regulatory relief can help the economy.
Thanks, Ian. I hope everyone's staying safe, staying healthy. Those are the most important things we can do right now. Ian, you did a really good job of outlining the importance of regulatory reform, as well as giving some good examples like California's AB 5 law that harms gig workers, regulations that impede the delivery and manufacture of needed medical supplies, and how regulations can get in the way. I'd like to talk about CEI's NeverNeeded campaign as we look at what our priorities are right now in the short term, as well as in the long term, which we'll discuss later. Yes, Kent.
Could I ask you to hold for just a moment? Amanda, could
Yes.
you shut down the chat function as soon as possible? Thank you. Ryan, go ahead.
Sure thing. Microphone check. How's my audio, Kent?
Very good. Thank you.
Cool. Thanks so much. So right now, our top two priorities in the short term are to keep people safe and healthy and to rebuild the economy as quickly as possible. And that's in order, the priorities: health and safety first, economy second. We need to be clear about that. What's the biggest obstacle to that? Right now, we think a lot of it has to do with regulation. Most of Washington is busy right now with what our colleague Wayne Cruz calls flash policy. That's things like stimulus and bailouts, some of which is helpful, most of which is less than helpful. So what we're urging with our NeverNeeded campaign is to encourage politicians in Washington, and especially at the state and local level, which is where most of the real impact will be felt, to look over their body of regulations and get rid of ones that are getting in the way right now, that are getting in the way of grocery deliveries, that are getting in the way of getting food to people, regulations that get between sick people and medical care, or between needed medical supplies like masks and ventilators and doctors and patients. That is what we need to do right now. So to that end, our NeverNeeded campaign is active on social media. We've done a lot of coalition work. A lot of our allies are with us on this. Americans for Tax Reform, for example, has compiled a list of 300 regulations that policymakers, mostly at the state and local levels, have already gotten rid of. So policymakers are active on this. We're encouraging as much crowdsourcing and activism on these ideas as we can get. Congress has a number of bills already introduced that we hope would also assist in the NeverNeeded effort. We'll be discussing some of those in a bit. And Amanda, if you could put up a graphic that we have. Kent and our digital team put together a nice infographic that is good for identifying what makes a NeverNeeded regulation and what doesn't. Because not everything qualifies as never needed, as much as we'd like to repeal a pretty good chunk of the regulatory code. By way of reference, the Code of Federal Regulations right now totals about 185,000 pages. But right now, when time is of the essence, we need to focus our efforts on regulations that are hindering health and safety and hindering the economic response, helping people who are out of work and have bills to pay. So we have 6 ideas for how to spot NeverNeeded regulations. Ian's already talked about a couple of these. If a regulation slows the distribution of tests or of medical devices that help patients, those regulations should go. The FDA, for example, to approve a new drug will usually take something like 7 or 8 years, and it'll cost several $100 billion. Several billion dollars. I was off by 2 orders of magnitude there. That's expensive enough during peacetime. During a time like now, where we don't have that kind of luxury, we cannot afford that. So, for example, we're seeing clothing manufacturers converting from making clothing to making masks. A drumhead manufacturer for musical instruments is converting from making plastic drumheads over to plastic face shields because a lot of the equipment is the same. For companies that want to convert to making other equipment, sometimes they have to get permits that can take 45 days or 90 days at a time when people need the equipment now. Those regulations and those permits should be eased right now, at least temporarily, if not permanently. If a regulation is doing harm during a pandemic and it's not needed now, it was probably never needed in the first place. That's where we got the name of the campaign. Another one is suppose regulation blocks access to telemedicine, which for some patients can be safer than going to a hospital in person. Hospitals are some of the germiest places on earth. People don't go there unless something is wrong. And one way to stay healthy is to avoid being exposed to that. That's where telemedicine comes in. Until very recently, telemedicine was almost illegal in a lot of circumstances, unless it was for rural communities where the nearest hospital can be a very far drive away. Federal regulations blocked the use of telemedicine. Those regulations were also eased temporarily. That easement should be made permanent. It helps not just right now during the pandemic, but afterwards. A lot of patients with mobility problems or other factors that might make a hospital visit or a clinic visit impractical would benefit from rolling back that regulation. It helps no one, especially now, and that kind of regulation should be removed. It was never needed in the first place, and it's certainly not needed now. Another one we're kind of seeing now in markets is if a regulation increases the cost of energy, it probably isn't doing any good right now. We've seen what's happening now with gas prices, where the price of a barrel of oil, at least for ones that are expected to be delivered during the month of May, that price actually went negative. Of course, for deliveries due in June or July, that's different. Those prices are still low, but closer to normal. There are a lot of regulations intended to crimp supply, raise prices, require power plants and companies to use this or that type of fuel instead of another. A lot of times, those raise prices at a time when unemployment is almost at record levels, people are scraping together money to buy meals, pay rent. The last thing they need is to have to pay extra on their energy bills, especially when it doesn't keep people safe and it doesn't keep people healthy. Those kinds of regulations are never needed. Our fourth category, which Ian also alluded to, is if a regulation makes it more difficult to hire employees, then that was probably never needed in the first place. The most egregious example is in California with its Assembly Bill 5. That AB 5 law is intended to reclassify independent contractors as formal employees. The goal is to get them higher wages and higher benefits. But the law was backfiring well before the coronavirus hit. It didn't even come into effect until about January. CEI published a policy paper around then highlighting a lot of the problems. And both I and our new colleague, Sean Higgins, have been active pointing out other shortcomings. And essentially, to really encapsulate the spirit of what AB 5 does is, for example, there's a website called Vox Media. They're an umbrella organization. They do news. They have other sports sites that do sports and culture and all kinds of other reporting. Now, they published a piece largely favorable of AB 5, saying it's a win for workers. It's going to help thousands of people. Within a few weeks of AB 5 actually coming into effect early this January, they laid off hundreds of journalists because a lot of their journalists are not formal employees with those types of benefit packages that you see associated with that classification. They use a lot of independent contractors, many of whom are based in the state of California. Those people are now looking for other work. And as it turns out, the timing was a disaster. And it's not just journalists that AB 5 is putting out of work. It can put out entertainers, translators, which is, it turns out, a pretty big deal in the present moment. California has a very large non-English speaking population. When they go to the doctor, sometimes they need translators. Those translators typically work as independent contractors. And in California, that means they're not allowed to work. Those kinds of laws are actively harmful right now. They're putting thousands of people out of work at a time when millions of people are filing for new unemployment claims per week. Not only that, but a lot of contractor jobs, as it turns out, are work from home. At a time of social distancing, social isolation, quarantining, those jobs are not just a way to keep people afloat financially, it's a way to stay safe. So AB5 is not only hurting public health, it's also hurting the economic recovery. It's harmful on both of the most important priorities, and that law should be repealed immediately. Unfortunately, this morning, California Governor Gavin Newsom essentially doubled down on his support of AB5. Although I did hear that in New York, where they're considering their own analog to AB5, they've been reconsidering. At the federal level, the House passed a bill called the PRO Act, which is essentially a wish list bill for labor unions that would have implemented essentially a federal version of AB5. This would be a disaster if it ends up passing. The bill passed the House. The Senate is unlikely to act on it. But that sort of legislation should absolutely not pass. It is harmful on all counts, especially during the pandemic response when health, safety, and economic recovery are in the utmost. It's just a disaster. Another of the fifth of our sixth never needed categories is if a regulation adds another layer of bureaucracy or complexity to being in compliance with the regulations, that was also probably never needed. I have a guiding principle for public policy, and that is that simplicity is beautiful. The 185,000-page Code of Federal Regulations and its state-level equivalents are some of the ugliest policies in existence. And those greatly need to be pared back. So many regulations that we've talked about today, whether it's food delivery, labor restrictions, lending regulations that prevent small businesses from staying afloat and getting the capital they need to pay their bills, are actively harmful, and they're also ungodly complicated. Americans spend, all told, billions of hours on paperwork alone just to stay compliant with regulations. A small business will spend upwards of $10,000 per employee to be in compliance just with federal regulations. State and local rules are extra. Many of those burdens are needless. They don't advance the goal of the policy. They don't help with public health. They don't help get unemployed people back to being employed. They don't help. They were never needed. Those should be gotten rid of. The final category is if a regulation gets between business owners and the capital they need, it probably shouldn't exist. Crowdsourcing, for example, people getting together to support a local restaurant that they like that is in danger of going out of business, regulations like that, or a small business that due to what it makes isn't in high demand right now during a pandemic. Anything to do with crowds such as sports or say theaters, concerts, those sorts of things. A lot of those smaller venues are struggling right now, and one way they can stay afloat is through crowdsourcing, getting lots of small loans from lots of small investors, even if it's just their customers trying to do a favor, doing something nice for something they love. A lot of regulations make that either impossible or very, very difficult. They make the transaction costs higher than the actual loan itself in some cases, so those mutually beneficial transactions don't happen. Those kinds of regulations are going to be immensely harmful to the economic recovery that we're going to need to go through after the pandemic passes. And it's also going to prevent businesses from staying afloat long enough to survive through the pandemic. We still don't know how much longer we're going to have to stay isolated and stay at home. So businesses are dealing with a lot of uncertainty and making it more difficult for them to find the capital they need to keep their doors open and to welcome back their employees isn't going to help anyone. So to that end, we've been active on social media. We've put out a paper. We have our infographic. We've been working with groups at the state and federal levels, as well as internationally. The Institute of Economic Affairs in London has also been jumping on the NeverNeeded bandwagon and coming up with their own ideas. So we really think this is an important priority going forward, both for public health and for economic recovery.
Ryan, I'd like to pick up on that. And to do so, I'm going to read to you a lead from a Washington Post story that went up this morning by White House reporters for the Washington Post. They started this way. Senior White House and Trump administration officials are planning to launch a sweeping effort in the coming days to repeal or suspend federal regulations affecting businesses, with the expected executive action seen by advisors as a way to boost an economy facing its worst shock in generations. Two people familiar with the internal planning said. The story goes on to say, the White House-driven initiative is expected to center on suspending federal regulations for small businesses and expanding an existing administration program that requires agencies to revoke 2 regulations for every new one they issue, the 2 people said. Now that second piece there sounds, for those of us who track regulatory policy closely, sounds like an expansion of the 2-for-1 executive order. The story, I think, gets into real-time deliberations that are happening by the economic team of the administration, negotiations they're trying to work out so that the Congress doesn't come up surprised with this action. Could you speak for just a moment about longer-term proposals, longer-term changes in the way we make regulation, assess regulation, and ultimately change the dynamic so that over time it becomes easier to repeal regulation than currently it is a very cumbersome process.
Yeah, what we're talking about is that it's not enough to repeal this or that rule in the moment. We have to make our public policies and the economy more resilient against future pandemics and whatever other crises the future will bring. That means, it's not enough to repeal this or that rule. We have to reform the rulemaking process itself. One reason we're in this pickle, regulatory-wise, is because the regulatory system is geared towards putting in all kinds of new rules, but at the same time, it's also very bad at getting rid of old rules that become obsolete or that turn out to be unexpectedly harmful. We have a lot of ideas here at CEI for just those sorts of long-term institution-level reforms. We need to do that alongside getting rid of barriers to healthcare regulations or keeping small businesses open or hiring people who need work. Probably the best idea that we have for that is something of a standing commission that would comb through that 185,000-page code of federal regulations. This would be a standing committee, it would be bipartisan, and it would be modeled on a very successful policy that was practiced in the 1990s, so it's really not that new of an idea. When the Cold War ended, a lot of military bases either didn't need to be open at all or could be successfully operated at a much smaller and much cheaper scale. Billions of dollars on national security were not providing national security because the Soviet Union wasn't there anymore. We didn't need them. We needed to adapt. The trouble is that no congressman would ever vote to close a military base in their own district. It would cause a lot of political pain and no one would ever do it. Writ large, you have 435 members, each of whom might see the bigger picture and agree with it, but would not vote to advance it. The way we got around that was essentially to outsource the problem. Congress passed a bill to establish the Base Realignment and Closure Commission. This operated over a couple of rounds back in the 90s and was an independent bipartisan commission that didn't have to worry about voters kicking them out of office. They looked at what military bases were needed, which ones weren't, which ones needed to be pared back, and they sent a blanket recommendation to Congress. Now, Congress, of course, is full of vote trading and back scratching, that sort of thing, and people realized that they needed to insulate this omnibus base closure package against that. So what they did was they required that Congress vote on it up or down with no amendments allowed. You either had to vote for the big picture, even if it cost you a little bit, or you had to vote against the whole thing and harm not just your constituents, but the entire country. Congress got it, and they passed through, I think, 3 or 4 rounds of the Brat Commission, successive packages that ended up saving billions of dollars per year. This was a major success. Most of my colleagues have heard this before, but one of my favorite economists, Ronald Coase, had a saying that if an economist who by his efforts can delay a wasteful government program that wastes a couple millions of dollars a year, can stall it even just for a few weeks, he'll he'll have earned his lifetime salary, probably several times over. You can adjust that for inflation. But the billions of dollars saved in the Brat Commission back in the 90s paid for a lot of economists' jobs. We're trying to advocate for the same thing, but for the Code of Federal Regulations. That code has been around for decades, and a lot of the rules are old, obsolete, actively harmful, and more to the point right now, they make the country less resilient against pandemics. They make the country less resilient against the coronavirus right now in the moment, and they will also make the country less flexible, less resilient, less capable against any future crisis, whether it's a recurrence of coronavirus or something else entirely that we cannot foresee. That kind of model, which we're calling a regulatory reform or a regulatory repeal commission, would operate very much like the Brat Commission. It would have, there are lots of ways to cook that particular egg, but it would be independent, bipartisan. The Code of Federal Regulations is comprised of 50 titles. That's too much to go through in one go, especially at 185,000 pages. So over a 10-year period in rotation, it would go through, say, 5 titles per year. And then every year it would send that kind of omnibus package with the insulations against special interest trading. So no amendments, you got to vote it up or down. You can't stall on it, you have to vote it inside a certain window of time. So you can't let it die through neglect. This would happen every year, and after 10 years, they will have combed through the entire Code of Federal Regulations. Because even though, yes.
It seems to me that this would have the benefit not only of cleaning out the regulatory underbrush and rooting out harmful regulation, but also it would be an important step forward for reclaiming the prerogatives of the Congress when it comes to setting the course for how their laws are implemented and reining in what is too often an independent regulatory state. Is that fair?
Yeah, that's actually core to the mission. Article 1, Section 1 of the Constitution states, all legislative powers herein granted are given to Congress, not to agencies, to Congress.
I'm seeing the first of the questions come in from our audience, and before I turn to the first one, Ian, I want to bring you back into this discussion and ask you to drill down a little bit on what Ryan was talking about. In the area of consumer finance, we're seeing, I would say record numbers, but that does not do justice to the situation. We're seeing tens of millions of households turn to unemployment just in the past few weeks. Household liquidity is a major source of concern. The economic destruction that has been wrought in the last 2 months will be very difficult to recover from. How is it that the NeverNeeded campaign can address and get at the question of helping people muddle through this time from the household perspective, the consumer finance questions?
Well, unless we're going to go full socialist and institute a universal basic income or something like that, the answer to the liquidity question has to be focused around consumer lending. It has to be focused around the banks and the credit unions and other institutions that are good at getting people money and getting people money quickly. The trouble is that we have had probably 2 decades now of financial regulation that is predicated on the idea that this is often a bad thing, that the lenders are unscrupulous for some reason, or that sometimes the borrowers might have ulterior motives related to things like terrorism or something like that. So what we've seen is a sort of sclerosis or regulatory sclerosis grow up on consumer lending. Started with things like the Bank Secrecy Act and Know Your Customer regulations. Then went into overdrive with the creation of the Consumer Financial Protection Bureau, which essentially was there instituted to say, no, you can't get a loan, and this is for your own good. the Orwellian nature of what they call consumer financial protection. You can't get a loan when you need it. So what we need to do is look at this, these layers of financial regulation and ask, are these making the crisis worse? Is this leading to people having to be reliant on charity more than on their own efforts and recognizance? If you look at what the initial result, the initial push out of the payroll protection program from the CARES Act, you see that Know Your Customer rules and Bank Secrecy Act actually caused that to not have the intended, not have the result that Congress intended. Congress intended small businesses to get the money. Because of the existence of Know Your Customer Act, Know Your Customer laws, banks actually tended to loan to people with whom they already had an existing relationship, because they already had the Know Your Customer paperwork all done for those businesses. So those tended to be larger businesses, chain businesses. We saw how Shake Shack got $10 million in loans, and has already said that they're going to pay them back. If it wasn't for Know Your Customer laws, then those banks would probably be lending to smaller local businesses just as much as to larger chains and franchises. So what we need to do with these financial protection laws is just go through them and see which are really causing problems at the household and small business level, and get rid of them. Some sort of an emergency measure, some sort of blanket exemption for small businesses from Know Your Customer laws would be really helpful, I think, and that goes well beyond the financial protection arena.
So thank you both for your contributions to this panel. Just a couple closing remarks for everyone. I want to draw to your attention each of the next 2 Tuesdays, Tuesday the 28th and Tuesday the 5th. We have our second and third of these sessions scheduled. More information will follow online. I hope you'll be involved with us there. Next week, we'll be discussing the role and limits of NeverNeeded campaign in tech and telecom regulation. And following that, we'll come back to these structural questions about the way regulation is made, monitored, and ultimately, hopefully much of it repealed, in a conversation with Philip Howard from Common Good and Cass Sunstein, Harvard law professor and former Obama official. Finally, I want to thank each of you. I hear from supporters as well as detractors of CEI every day, and you are each in your own way pushing us to be a little bit better and encouraging us to do a little bit more than we've ever done before to move these policy questions along into genuine implementation. It is the case that when crisis has hit America in the past, almost like clockwork, temporary power flows from states to the national government, and it tends to flow from the legislature to the executive branch. Today, we're at a moment when that trend, that history, is up in the air. And we have a chance to reverse that in order to not only reset the balance of authorities based on our constitutional order and the rule of law, but to drive authority and power back to individuals for homes or households, individuals and households and businesses to make decisions about how to work together, how to complement one another, and how to cooperate. That's our objective. That's where we're headed, and thank you for being part of it. With that, we will close the recording, and I look forward to speaking with each of you soon.